Hey, welcome back to the Helpful Home Inspector Show. My name is Matt Yake. I am the Helpful Home Inspector. We're coming at you live from our studio up in Hartford, Wisconsin. And today we have two very special gentlemen here from Colonial Insurance. Colonial Insurance focused on selling insurance to you to help you, basically take care of your life. And when things go bad, you got to have that safety net. And these guys are the ones that sell you that safety net. All right. But we have Jack Larsen and Dan MacLeod here from Colonial Insurance. Colonial Insurance, Menominee Falls based, over on Appleton Avenue there, over by the high school. Actually inspected the office for Dan when he went and bought that.
Absolutely.
And if you're looking for an insurance agent, definitely look them up. But they're here today. We're going to be talking, our main topic is going to be about homeowners insurance and kind of the ins and outs of it, what it is, what the limitations of it are, and that kind of stuff. We're going to kind of get into it. If you're with us here live and you'd like to ask a question, feel free to drop it in the comments down below. We'll make sure to get those answered for you. If you're tuning in today, we'd love it if you hit subscribe and join our group here. We would love to let you know when we have new videos coming out, so that bell notification is huge. And then if you like the stuff we're putting out today, give me a thumb up. All right. So Colonial Insurance, you guys, we have been working with you guys for, well, I've been working with you for longer since I've known Tammy even,
Yes.
So I've been with, it was originally Don, your dad, signed me up.
Correct.
And I got car insurance when I was in high school through him.
Yeah.
And Don signed me up, whatever, when you guys, the office actually was across the street kind of from where yours is now. It was in that little strip mall thing across the street there.
Yes.
Yeah.
Mm-hmm.
Him and his partner were in there, and he signed me up in the back office there. And we been riding with you guys ever since, and it's been great. And, we bought the house with you guys, and it's just been an outstanding relationship that we've had with you guys for almost 20 years, 25 years now, something like that. So,
yeah. Well, that's huge. I mean, that's the foundation of who we are and who we strive to be, is that lifelong customer and that relationship that we strive to build with everyone that we work with. And I mean, you nailed it on the segment in. Insurance is about peace of mind, and the agency itself, not me specifically, has been providing that for almost 50 years now. So I mean, it's really a great thing and a testament to clients like you and those that we work with.
97% customer retention.
Yes,
that says something,
the
man.
proof is in the pudding, right?
I mean,
We're doing something right.
If you got thousands of people that are willing to stick around with you guys for a long, long period of time, you're doing something right. And as far as the insurance goes, you guys, we're going to also be signing. So Peter, my son, Peter, he got his first new car, a Honda Civic, and we're going to get him signed up for insurance tonight. Or we're going to talk about the process of signing up for insurance a little bit tonight.
I told him I'm not going to force him tonight. He has to sign on the dotted line.
Doesn't have to commit, but we're gonna kind of dive into that a little bit, and kind of go through as part of one of our other sub segments here. But the way we start off all of our episodes is something to save you $1. So we're going to save you $1 this week, and we're going to do that by encouraging you to go out and seal all your concrete, all of your flat work, all your concrete on your driveways, your concrete in your garage. If you don't seal it up, here in Wisconsin, we use a lot of salt and sodium chloride on our roads, and if you get that stuff on your concrete, it eventually is going to cause this popping and pitting. You guys have all seen it in garages and stuff, If we seal that, it's not going to stop the damage, but it's going to slow it down. It's going to slow it down and make that concrete last a lot longer. So if you don't, though, you're going to end up with kind of a hot mess after a couple of years of not sealing it. Now, the sealant is easy. If you want to get a penetrating concrete sealer, it should basically soak into the concrete. You want it to go in, and that top, probably 1/8 inch of concrete should be sealed so that salt and stuff can't penetrate through there. Okay. And as the rain comes, it'll wash it all away, and that'll work great. And resealing is something you should do probably every 6 years on the concrete surfaces on the exterior of your home, and then on the interior probably every 10 years on your garage floor. So but that's how you can save $1.
Now, would that apply to concrete driveway, anything concrete, sidewalks, etc.?
Sidewalks, concrete porches.
Okay.
My concrete porch, before I bought it, they didn't use any sealant at all. So there's some popping concrete on there and stuff like that. So anywhere you have a flat concrete surface, a patio wouldn't be a bad idea. Patios don't get exposed to too much salt and sodium chloride, so you can probably wait longer on those because they're usually in the backyard and stuff like that.
Sure.
But anywhere you're putting salt and sodium chloride, anywhere that's what cars are driving on, if you're putting down sidewalk salt to walk on, definitely something you want to get sealed up for sure. And not very expensive. I mean, you can get A 5-gallon bucket of it, probably $45, and a 5-gallon bucket's going to do most of your driveway. It just goes on with a paint roller, and it's real, almost like water thin.
So the process is relatively simple.
Oh, super easy. Yeah, and some people will put it in like a garden sprayer, that you spray for weeds, and you can just spray it on, and you just want to make it nice and even, because otherwise you'll have spots you didn't get any, and stuff. But you're really easy to apply. It doesn't take a lot of effort, but you want to do it before it gets too cold out. If you try to do it in November, it's just not going to soak into that concrete and stuff, and not going to work as well because as it gets cold, it thickens up, stuff.
Does humidity affect it?
I wouldn't think so. Think so. I'm not a concrete expert.
Yeah.
But I wouldn't think so.
Yeah.
Yeah. I wouldn't think so at all. As long as the temperature, and it'll say right on the can, what the minimum application temperature is, probably 60, 65 degrees. We're going to only have a couple of those days left. So if you want to get it
soon,
if you're going to do it, you want to do it soon. Do it at the warmest temperature of the day. It doesn't need long to cure, but if you give it a good couple of hours at that temperature, you'll be good.
Okay. Yeah. I think my wife's watching my honey to-do list.
There you go. Got a little longer, baby. There you go. That's all right. And then one of the other things we do every week is we go through a defect of the week. And this week's defect is going to come at you from a home that I recently did. So let's boot this over to the computer for me, Tammy, would you? Come on, microphone. There we go. Hey, gang, Matt the Home Switch coming from Homer in Fredonia, Wisconsin. We got something a little out of the ordinary. We don't see these very often. We always see them once in a while. So what do you think? Should this be here or not? So this is on the furnace. This is their cutoff switch to turn the furnace off. They put a 3-way toggle in here, so it has 3 positions. On, which is the house line in. Then they have off, and then they have generator. And generator, they put a little pigtail on here. So they put this 3-way switch on the furnace, and basically, in the event of a power outage, they want to be able to power the furnace. Okay, and the 3-way switch. The problem that I had with it is that it probably can't handle the amperage. Those little switch, the little toggle switch like that. That's a hobby switch. It's a hobby switch that you'd use for like a small device that's not using a lot of electricity. Your furnace is using probably a full 10 to 15 amps of electricity, and to send that much energy through that little tiny switch might be a problem. But ingenuity has a place sometimes,
right.
And if there were a power outage and you did want to have your furnace operating, cool. Then that might be an option. If we talk about power outages, though, generally they don't happen in the winter, though, right? And when you would want your furnace to do one of these in the summertime.
Right.
And doing this kind of setup isn't going to get your air conditioner working. So it's something that if you want to have that kind of backup, that generator type of setup, get it done right. Go out and Peter actually works at Generac, and they sell all kinds of household generators and things like that are standby that, they're not super expensive, but it doesn't, make sense to try to, do all these patch fixes or whatever, and put yourself and your house at risk when you can just do something that's done right. And that way, if you want to have your air conditioner on, you want to have power to your refrigerator, all the essential elements and pieces like that, you don't have to worry about running cords everywhere. Just have the electrician come and hook it up for you.
Right.
So
peace of mind.
Yeah, peace of mind. So while I would not probably label this as a defect, like a major safety risk, there is a safety element to it when we overpower a switch and we send too much electricity through a smaller conduit like that. So, so that's that. Now, the next thing we're going to talk about is a little bit about Colonial Insurance. Now, Colonial Insurance, been in business since, 1975? Yeah, 1975. And they've been selling all kinds of different kinds of insurance. What are the most common insurances that you guys sell? What are we looking at?
Yeah, so I think the main differentiator is that we're an independent agent, so we're not married to one company, so we're not selling you just ABC company. We are an independent agent or a broker that specializes in anything personal, home, auto, umbrella, your wrecked vehicles, jewelry, firearms, high-value items that you want to schedule. I like to tell people, personal-wise, everything that we sell is the full gamut besides anything health insurance related. So we do life insurance too.
Oh, you do?
Yeah.
Okay.
Yep. Life insurance, disability. And then to flip into commercial, we're pretty broad there. Apartment buildings, contractors, asphalt contractors, electricians, really you name it commercial wise, we've got a mix out there for it.
Yeah, and the nice thing with Colonial Insurance is you're not stuck with just one company. It's not like you're with State Farm and that's all you got.
Right.
Colonial Insurance, like when Peter goes to get his car insurance, Dan can run us through Progressive, Badger, West Bend Mutual, all these other companies, and kind of send it out to all these different people or different insurance companies, to get quotes and estimates, and every different insurance company. Well, most of them are going to carry the similar type products, how those are valued and how they compare for each client might be a little bit different.
Yeah, absolutely. I mean, I think, Jack, if you could maybe attest to how the algorithm plays in with each one of our companies, and, we like to make sure that people don't feel like they're being forced into a box with a carrier. Instead, we want to find the box that fits best with them.
Yeah, I mean, excuse me. So when people come to us, I mean, we have a pretty good idea of the risk, right? So everything in insurance is risk, right? From you to your house to your life. So we have different carriers that we know are going to be a better fit for certain individuals, right? So if you're older, sometimes you fit into a better carrier, call it carrier X, without going into any detail on which specific carrier that would be. If you're younger, if you're just getting your first auto policy, maybe we're going to find you a better policy or a better rate with this carrier. And really it goes down the line too. I mean, what I would mention is that, we're talking a lot about homeowners insurance here today. We're going to speak a little bit about auto insurance, but when you marry the two, right? If you put together a homeowners program with an auto program, that's where your biggest savings are going to come from.
Sure.
So what we want to do is we want to find you every possible savings. We have carriers. Every carrier is going to give you a discount, home and auto discount. When you have multiple cars, you're going to have a multi-car discount. And when you can start stacking those up, that's when you're going to find your best savings.
Now, what makes one insurance say, because if the two insurance companies are looking at the same person, what makes one think that this person has more risk than this company does? Because that's what comes down to. They're gonna charge you based on the level of risk they see you being, right?
Correct.
And the higher risk you are, the higher your deductible is going to be, or your insurance is going to cost. And if they see you as less of a risk, then it's going to be cheaper, right? So how do they, if they're looking at the same person, how does that work?
Yeah, I mean, there's a very large actuarial data set that goes into everything and looking at that same person. So there's the things that individual or we can all control: our driving record or driving habits, our credit score, zip code where you're living has an impact. And that's not to say that they're not open to certain zip codes, but they look at all the claims data that comes in from every zip code. Yep. If there's more hail happening, in this pocket, the homeowner rate might be higher because there's been some frequency there.
In that area, sure.
And same thing if there's been some frequency in speeding violations every other year, along with an accident.
Or car thefts and whatever else. Yeah.
And the product that they're insuring too. I mean, let's look at a brand new F-150. Those are going for $75,000.
One insurance company, you're not in bed with any one insurance company that you're going to just, take it on the chin for them or anything like that. These guys will tell you, well, West Bend's good at this, but they're not good at this. If you go to West Bend Mutual, they're not going to tell you, I'm not good at this. They're going to say, I'm great at everything, man. I don't know what you're talking about. I do everything awesome, better than everybody else in the world. And these guys are going to tell you, these guys do this best, these guys do this best. And like when I was talking to Don actually about our business stuff, he's like, well, Matt, while West Bend's great for your home stuff, they're probably not the best for your business stuff. Acuity does a much better job with your business stuff. And so that's why we kind of had different things in different areas, with different companies. And to have somebody that can, I guess, impartially break that down for us is important. You know what I mean? And so that's where I found the real value with Colonial Insurance and why I went with you guys and I think after having the experience of going with an insurance broker, I don't know that I would ever go directly to an insurance company anymore. Right. I think even if I did, God forbid, leave Colonial, okay, I think I would still just look for a different type of broker, what I mean, is where it would come down to for me, because I like that impartiality, what I mean? That means a lot to me.
Yeah. Well, and I think everyone in the industry that's an independent agent that that does it the right way, you're really strategic on what companies you partner up with. You can always go out and get another contract with another company, but what my dad has taught me and Jack, and really the integrity of the agency, when you're buying that piece of paper, you're not just buying Colonial, you're buying Don MacLeod or Dan MacLeod or Jack Larsen or our other producers as well.
I got your dad's cell phone. I called him up on a Sunday, and dude answers the phone and talks to me. Now granted, I've been golfing with Dan's dad, Don, for a long time or whatever, so we have a relationship outside of Colonial Insurance.
As long as you don't call him on the course.
But still, then he doesn't even
pick up
answer
for
the
that.
phone. Doesn't pick up on the course at all, even.
Purist.
Yeah, for sure. But it's been a great relationship with Colonial Insurance, and I look forward to the future that we have with us. Now, as far as Colonial Insurance, you guys work with how many? You guys work with a certain number of companies on the regular, right?
Correct.
Are you limited to the number of companies you can work with?
For the most part, we like to say that we have like a core 5 to 7 companies that we do the lion's share of our business with. If there's something that we can't place within that lion's share of the companies that we operate with,
creative.
Yeah, we get creative, and we have broker dealer contracts where we can tap into hundreds of other insurance companies as well.
Sure.
But that's typically a situation where there's something claim history wise going on, or just something specific to the actual policy.
Yeah.
Which is good. It's a good thing to have in our holster and at our disposal. But chances are we've chosen those companies that we do the core of our business with for a reason. If it doesn't fit there, then we're not selling on value.
Yeah, and if you're just going to the one insurance company, if you're just going to State Farm and they say they can't do it, well, then you're stuck. You got no other options. Yeah, where these guys are going to be able to go out and search out those different options for you, and I guess be able to rationally break down those different options as well, and what makes sense for you. You know what I mean? Because insurance policy, just like any other piece of paper these days that you're getting into bed with as far as business goes, can be complicated, and having that expert that really can break that down for you is important, And then I guess one question, when you're talking about these different companies, what sets one insurance company apart from another? Like what makes you, what would make one better than the other?
Yeah, I would say a lot of it would be niche based. We've got certain companies that are more apt to write some rural exposure. Maybe you got a couple of horses or some livestock and just hobby farm exposure going on. So they've all got their niches. And then from there, some of them give accident forgiveness on your first at fault on the auto. Others give you some cash back if you don't have a claim 1 year. And then paid in full discounts might be higher with others. And I will say all of the companies that we operate with, claim service is our number one focus, making sure that they deliver.
Customers taken care of. Yeah. That extra combo auto and rent. That's coming up, I think. Did I skip over that? I don't think I skipped over that. Tammy's bringing something to my attention that's an important element that we should talk about. So as far as, and that goes kind of into with what Jack was talking about before, in how one insurance company might view that person differently than another person based on risk and all that kind of stuff. So, and like Progressive per se, much more friendly to new, younger, and that kind of crowd or whatever, but they're also dealing in mass quantity as well.
Correct.
Where some of the other smaller insurance companies may not be willing to dabble in that type of risk because they're smaller volume of clients, right?
Right.
So that I guess plays into it too, and kind of understanding why those guys are doing that and where that might fit might be really a good thing to look at when you're sitting down talking to somebody for sure. Yeah. Now, one question that I've always had, and I never asked Don or anything, how do you guys get paid? Because my checks go to West Bend or go to Acuity, go to wherever. They never go to you guys.
Well,
how do you get paid?
We should start doing separate invoices.
We probably should, yeah.
No, so the carriers take care of us from a commission basis. So we get a percentage of new business and renewal business, and that's really how it goes. And there's each company is different at what percentage that might be, and it might change on renewal versus new business. But they take care of that directly.
Yeah. Okay, cool. And then what do we have here? The benefits of an insurance broker. I think we covered that one pretty significantly. And like I said before, you guys, 97% client retention is huge. I mean, how many clients do you guys overall carry with right now? Any idea? Give me a ballpark.
I'd say little over 3,000.
Yeah, that's pretty crazy. That's pretty crazy. And the thing with the 3,000, so it's not just Dan handling 3,000. There's Dan and there's Jake and there's Don and there's Julie and you guys all kind of help each other out a lot. But a lot of the communication that happens between the client is directly with their insurance company. But you guys are nice that you guys are always there to answer questions and things like that. And sometimes when we aren't getting the best service from an insurance carrier, being able to talk to you guys and help work through it and stuff just makes it a lot easier.
Well, and that's something that we should touch on is that us as the agent, whether it's us or if you're working with a captive agent, meaning a State Farm or American Family, that's your concierge. That's your person to help file the claim for you, help give you solid advice. There might be the scenario where, you back into the garage door and it's $800 worth of damage. You got a $500 deductible. And does it make sense to file that, or do we eat that one out of pocket?
We just ate it. We just ate it.
Yeah.
It was an innocent accident, right, Tammy? She doesn't have a microphone, so she can't talk.
Oftentimes they are.
Yeah. It was just the bottom two panels of the door or whatever, and call up Cedar Rig overhead door. It came out, cost us $800, but the effect it would have had on our insurance and stuff, and our deductible would have been $500 anyway.
Correct.
So it just didn't make sense for us. But that kind of stuff happens all the time.
Absolutely.
So yeah, for sure. Now let's get into our main topic here, homeowners insurance, and the basics of homeowners insurance, and kind of correct me on the definition here if I'm off a little bit. Tammy, can you scroll that down a little bit for me? Thank you. So when we talk about a standard homeowners insurance policies, we're going to provide coverage to repair or replace the home and its contents in the event of damage. The usual damage that is included in this would be resulting from fire, smoke, theft, vandalism, damage caused by weather, like lightning, wind, hail, tree falling, whatever, that kind of stuff. Granted, there's a lot of nuance outside of that, but ultimately those are the kind of the basics of what homeowners insurance is intended for, right?
Correct.
Okay.
Yeah.
Now, when it comes to homeowners insurance, it is there's lots of options, lots of choices with that, okay? And we're going to dive into that a little bit. But when it comes to homeowners insurance, who needs homeowners insurance? Homeowners insurance is intended for what group of people?
Yeah, really then anybody that owns a house. At the end of the day, the mortgage company is the one that's going to require homeowners insurance because there's a mortgage on the property. They essentially own that until it's free and clear.
Yep.
But anybody that wants to protect their asset.
And even when it is free and clear, homeowners insurance still.
Yep.
And it beats the self-insurance option.
Yeah.
For sure. Yeah. So basically anybody that owns a home should have homeowners insurance.
Now, when it comes to owning a home, we're talking about owning a single structure. Now, there is two other kinds of somebody that lives in a home type of insurance: renter's insurance and condo insurance. How are those different from homeowners insurance?
Yeah, I'll jump in on that one. So renter's insurance is relatively basic, right? You're going to have coverage for your personal property. You're going to have liability coverage, which is important because that's going to follow you anywhere in the United States. Prime example, you're on a golf course and you shank one and you hit somebody on accident, right? They could come back and sue you. So your homeowner's insurance is going to follow you to that.
What? Wait a second. So if I'm on the golf course and I'm not even near my home, and I hit somebody else's house with a golf ball or whatever,
shatter the window,
and that covers me.
That's your personal liability. It follows
even though I'm nowhere near my house.
Correct.
Okay.
Yep.
Cool.
So that's another important aspect, especially with young individuals coming out of high school, out of college. They say, well, I don't own much. I don't need a lot to protect my personal property, my belongings.
Yeah.
Right. But the liability aspect follows you everywhere, and that's relatively cheap.
Now, that golf ball situation, is that covered under renter's insurance too?
Mm-hmm.
Oh,
yep.
Okay.
Because there's a liability aspect to a renter's policy.
Sure. And so with renters, the stuff you have in your domicile is insured, but not the domicile. So
Correct.
It's cheaper.
Correct. Yep.
Yeah.
Right?
And
essentially.
And you want to protect your personal property too. What if your neighbor in your apartment building lights a candle and lights your apartment building on fire?
Yeah.
You lose everything, right? Without renter's insurance, without that personal property protection,
you'd have nothing.
You got nothing. And then that renter's policy is going to give you loss of use too.
Okay.
So additional living expenses.
Loss of use. So if it burns, you have to go stay in a hotel or wherever.
Correct.
That's
or even rent a new apartment
in the short term.
In the short term,
maybe. Okay. Yeah. All right. And then condo insurance. Now you own part of the domicile, right? So with a condo, let's say there's 100 units. I own 1/100th of the building, right? But it also insures all my stuff inside and all the other same stuff that we've been talking about that kind of has overlap, right?
Yeah. A lot of it comes down to the bylaws of the association. So we do have some condo associations with Colonial Insurance. Typically, it's a studs in type of a situation, meaning that the association's going to insure the shell. They're going to insure the roof, the siding, the plumbing, all of that stuff. And then anything from the studs in is going to be the unit owner's responsibility. Drywall, carpet, countertops, you name it.
Sure.
So those policies are traditionally cheaper
Okay.
than a standard homeowner's policy because you're not insuring as much.
Yeah, yeah. And then, but in like a fire situation, it doesn't get a little dicey there then, because then the structure is affected, but also their personal belongings. So you actually have, it gets messy.
Yeah,
right?
you've got two insurance companies that are trying to determine, whose was what here, and that is where we've had a lot of reviews with new clients that come in, and our number one question is, let's see that master policy and really see how it defines out.
Break it down.
And we'll keep an itemized list or a video or photos of your unit. That's one tip that we'll probably get to later. When you get a house or even your apartment, condo, do a little video walkthrough of what it looked like prior to a fire.
Yeah.
That makes claims adjusting a lot
Once
easier.
a year. It's not that hard to do. Grab your cell phone out and just walk around each room and videotape. If you have expensive things, make sure you videotape them up close, And then when you're videotaping on your phone, it's stored in the cloud. So even if your phone melts into a puddle, you still have all that stuff. And now you can say, I had this TV, I had this, I had that. Tammy has been through a fire situation.
Yeah, being through a fire before, I can definitely say that video helps, because when you go through claims, depending on how hot the fire is, the TVs were so melted, there was no evidence of it. Because I had it on video, they got replaced.
Yep. Yep. Exactly.
Let her get a hold of a microphone. Love you, baby. Now, as far as... good question. I like that. Okay. Now, as far as the insurance policies themselves, they can cover a lot of different things. But as far as the common elements, what we're looking at is, and I understand every policy can be different, so nobody's going to hold you to the fire here, but we're talking about dwelling in the structure, personal property, loss of use, which was something that I looked up, but I wasn't even aware of that thing. Yeah. But loss of use, what we're talking about there is if I can't live in my home, the loss of use portion of that policy is going to cover me to rent a place for my family while my house gets rebuilt or whatever happens. Yeah. Yep. And the main thing with fires, people, your house is insured. If there's a fire, don't worry about your personal belongings. Get everything that is living out of the house. We will build you a new one. Okay. As long as you have the insurance, you're covered and you don't need to worry about it. The new one, you're going to get the Helpless Planet, pick it out, and everything will be great in the end. But if something happens to you, your pet, your family, whatever, then that stuff we can't fix.
Yeah, that can't be replaced.
Exactly. Yep. Personal liability, this is where it comes in with the golf ball thing they were talking about. Now, I was thinking, when I saw personal liability, I was thinking about like on my property, like somebody, I have a pool and they jump off the slide and smash their ass on the side of the pool or something like that and break something, that's my liability,
Sure.
But you're talking about even at home. If I'm out and about.
Yeah, it follows you everywhere. And, the part with that, for the personal liability to kick in, you have to be liable for it. So that situation at the pool, if someone's being a knucklehead and does something stupid, there's going to be a little bit of digging in on the insurance company's side to say, hey, Matt, really, what did you do here to cause them to act that way?
Yeah.
But yeah, I mean, you walk into the house and there's a skateboard by the stairs or a deck railing goes out and you fall off a second story. Yeah. That's where that kicks in.
Sure. And then I saw something there. Medical payments can help. Homeowners insurance help with medical payments.
Yeah. So that's no questions asked or no fault coverage, I should say, regardless of how or who got hurt. That's guest liability coverage. So let's say I'm pumping iron in your house here and I drop a barbell on my teeth and chip all my frame out. Yeah. That would cover my damages for that, regardless of if I was at fault or not.
Oh,
I like to call that the please don't sue me coverage.
Yeah.
Right. So you don't have to tap into your liability.
Sure. Yeah. And then it also covers water damage, but water damage is kind of a particular thing. There's certain parts of water damage that are covered and certain parts that aren't, right? How does that work out?
Yeah. I mean, flood is completely separate, right? So it really depends on the origin of the water and how the water damaged your home.
Yeah.
We always recommend that everybody carries water sewer backup, because this is one thing. It's it's an optional coverage on just about every policy. It's never included. But if you don't have that and your sump pump fails, backs up into your finished basement, you have no coverage.
Or the sewer backs up.
Sewer backs up.
But that still doesn't cover flood insurance. That's not,
Nope.
still not covering
Still
a flood.
not
So
covering
like
flood.
what we had a problem with in like 2006, it was a whole like a lot of areas in southeastern Wisconsin here got flooded because we had that big heavy rain year. But some people didn't have flood insurance, so they didn't get the coverage, I guess, is what the way I remember it going down. And what happened was the people they couldn't get flood insurance. Like the insurance company literally would not let them have flood insurance, so they couldn't have protected themselves. How does that work out?
So I'm not sure about not being able to obtain it. Usually there's a 30-day wait period before you can get it. So if there was a mass event like that, there was probably a 30-day hold.
30-day buffer or something like that?
Yep. So a situation like that where there's that 100-year reign, which seems to happen more frequently than 100 years.
It just is what it is.
But yeah, in that scenario, most companies will look at that and say, okay, did it come in through the windows? It was coming in everywhere. It was most likely that the sump pump just couldn't keep up.
Yeah.
And they'll pay out based on your sump pump limit for that.
Okay, so that would be covered under the water.
Yep.
one. Okay,
Correct.
Gotcha.
Yep.
Gotcha. Yeah, and that doesn't happen all that often. I mean, that was a rare thing. I mean,
Well, and you got to know your house too.
Yeah.
And the grading around it, how often your sump pump runs. and-
grading gutters and downspouts, people. Yeah,
Good home inspector can point that out.
Exactly, every house practically. Grading gutters and downspouts. If we can keep the water away from the house, there's no way it's going to get into the house. You know, so clay-based soil pitched away from your house. Keep your gutters clear and make sure downspouts are at least 4 to 6 feet away. Do not put them in the ground. In the ground ones will always get clogged. They'll always get damaged. They'll always cause a problem for you.
Really?
And you're never going to know it until the water's leaking into your basement or you're outside in the rainstorm watching it gurgle up from underneath your downspout. So, yeah, bringing those above grade is always a good idea. I know a lot of people like to put them underneath the ground because they look
Aesthetics,
better. Yeah, it's just aesthetics, And some guys, then I got to pick it up with a lawnmower every time. Okay, well, it's on a little pivot. Walk around your house. You got to walk around your house anyways to pick up any garbage that blew in from the street or whatever, pick up the dog crap, whatever, and you just flip it up out of the way. They make little pivot things around there, which works out really good. But yeah, keeping that waterway is huge. And those, I guess, would be the kind of the basics of what most home insurance policies are going to cover, right?
Correct.
Okay.
Yep.
Is there anything I missed in that list?
No, that's a good list.
Now, one of the things that comes up when you're talking about homeowners insurance and insurance in general is limits, coverage limits, right? And coverage limits are arbitrary based on how much you're going to pay for insurance, right?
Correct.
And so how does that work? How do coverage limits fall into effect with homeowners insurance?
Sure. So main component of a homeowner's policy is going to be how much should we insure your home for?
Okay.
Now there's a difference between what you bought it for, the market value of it, and then what it would actually cost to replace it. So if you talk to any home builder right now, you could get estimates that range from $200 a square foot up to $350 a square foot.
Yeah.
Thinking of some of our home builder clients, I know a couple of guys, you can't build one of their houses for under $300 a square foot right now.
Yeah.
So
labor costs have gone through the roof. At least lumber prices have come back down a little bit and helped that scenario out a little bit. But yeah, labor prices are through the roof right now. And it's just, part of it is inflation, part of it's labor price. There's so many pieces that work into that. But yeah, you may have bought your house. Like we bought our house for $300,000 13 years ago. There's no way we could build this house for $300,000 anymore. There's
Not a chance.
no way.
No.
I mean, probably double that or around there.
And we have software too, replacement cost software that we can go and scrub data, get your square footage footprint, and ask some of the finished grade questions. Spits out the ballpark number, and then any good insurance company is going to come out and inspect your house. And it's not to call you out on like, hey, those downspouts aren't attached or things like that. They're trying to loss control and make sure that you're getting what you're expecting.
Yeah, and that you're something that doesn't happen in your house, and then you're not satisfied with the replacement, or the replacement comes in and you're gonna have to pay $150,000 out of pocket because your limit's too low. So when you're talking about limits with your agent, it's very important to talk about rebuild and what that cost might be. Not just this is what I bought it for, so this is what I want to insure it to. That's not how it works.
Yeah, right.
Yeah,
we have that conversation a lot.
Yeah, you got to talk about replacement value, and that kind of stuff. So for sure. Now, one of the things that comes up with homeowners policies, and we talked about there's a lot of different elements, is add-on coverages, right? And there's some that are more common than others, right? And part of it has to do with where we're located in the country. Like we thought one of the things on our list is earthquake insurance. And we talked a little bit about that before the show. But earthquake insurance, basically, out on the West Coast is a big thing. Out on the East Coast, little thing. Here in the Midwest, rare breed. You might get one or two.
You got a couple
people.
fault lines, but nothing that I would lose sleep over.
No, nothing.
Or be rushing to add to my policy.
In 48 years, I've never had a shake under my foot. So I'm not really terribly worried about that. But swimming pools, however, that's pretty common, right? I mean, probably not incredibly, not like everybody, but probably 10%. Of the policies are going to have swimming pools or whatever. Yeah. And swimming pools are something that does because you have to add that to the insurance. What does that do to your insurance costs?
So kind of twofold. If you're talking like an in-ground swimming pool, those are not a cheap date to put in. So there's some inherent value there that you have to bump up coverage for.
Oh, and then, for like replacement value.
Correct.
Talking about. Okay.
Yeah. And then there's some exposure there too. Kids slip and fall. Are you putting in a diving board? Are you putting in a slide? What's the clearance level?
That was the diving board was a huge thing. That's why when you go to I go to inspect a lot of houses, they still have that little metal bar where the diving board was, but they all took it out because they didn't want to pay the extra insurance for the diving board.
Yes.
Yeah.
So we do have companies that will take the diving board and or a slide. Or I should rephrase that: diving board or a slide. They don't like to have too much partying going on in the pool.
Sure.
So you got to pick your poison.
Sure.
But yeah, pool's a huge exposure.
Yeah. And then equipment breakdown was something I read. I mean, that when I think of that, normally I'm thinking about like a home warranty type of thing. But is that something you guys sell insurance for too? As a rider for
some of our policies actually come with that built in.
Really?
Where others need to be added.
And by that we're talking about like furnace and water heater and stuff.
Yes,
like that, right?
there's specific perils. So in the insurance industry, a peril is a cause of loss, right? There's specific perils that have to happen in order for that to be covered. So a power surge that fries your furnace, fries your AC.
Sure.
That's typically what we
like
see.
Like a lightning strike or something like that, or something with the power company happening. Yeah.
Or, sometimes it could just be internal, right?
But it's not just your general failure of a system, right?
Depending on the failure, it could be covered. So
the water heater rusts out and starts leaking. That's covered.
Yeah, depending on the policy form, like diving into the weeds of the small print and company to company. We'll get into this later too, but in my opinion, homeowners insurance for stuff like that, it's not what it was designed for.
No.
If you're buying a house and you want the peace of mind for the washer, dryer, water heater, furnace, stuff like that, get a home warranty.
Home warranty is the way to go.
Yeah. You got to insulate yourself.
We've actually got Mark Smith and Michelle from American Home Warranty. They're coming on, I think, in like 3 weeks or something like that. And so we'll actually have them on, and then we'll kind of talk a little bit more about home warranties and dive into that a little bit deeper. So if you're interested in home warranties, tune in. We'll let you know when that's coming out. I'll put some stuff on the social so you guys know when that's happening. But kind of goofy that is included in the homeowner insurance policy. I never thought of it. I mean, in having a homeowner insurance policy forever long, I never thought about if something happened to my water heater, I'm going to call you guys,
Right.
But
typically it's not going to be above your, water heater's not typically above your deductible either. So
it would be for us, but I like a lower deductible,
Sure.
So that just is what it is.
Sure.
With that. Yeah. Sure. Underground utility. What does that play into homeowners insurance?
Yeah, so that's a relatively new endorsement coverage, they call it, any optional coverage. That would be for your underground service lines. So main example would be like your main water lateral. So you think, Menominee Falls area, there's a lot of 1950s, 1960s homes. Clay, or they typically clay.
The water lateral is not going to be clay. The sewer lateral is going to be clay. Yeah, and those can be $15,000.
Right.
Yeah, if that goes bad.
And that's the coverage limit that most companies are around $15,000 to $10,000, and that would be if tree roots cause it to fail.
Okay.
If it just fails from material wear and tear, that's covered too.
Or soil shift from breaking, that would be covered.
Do a lot of people get those inspected?
More and more now. Good. So sewer lateral inspections has been a thing in the home inspection industry for 20, 30 years. Okay. But the cost of the equipment is like $8,000 a camera. Wow. And you think when I'm shoving this camera down there, it gets stuck or something like that, and I yank on it,
there it goes.
$8,000 camera, toast.
Yep,
So a lot of guys just don't get into that. That's a much more expensive element, But we do it, and a couple of other home inspectors in the area do it. It is something that we charge $200 for each time, and it does take us some
peace of mind.
Yeah, I mean, when you're talking about such a huge expense, if you have to dig at that whole front yard, oh my gosh, and to be able to deal with it. Because if they move in and find it, does their homeowner insurance cover it even if there was a pre-existing condition of the home?
That's a good
In theory,
carrier
it
question.
could.
That gets
Yeah.
difficult, doesn't it?
Yeah.
So if we find it during the home inspection, though, the current homeowners insurance policy probably covers them if they have that right
Correct.
underground
Yeah.
utilities.
That would be
on
something
there.
that you would want to talk to the homeowner and their company to say, can you file this?
Yeah, and the best thing about having a guy like me do it is now it's you find out about it now and it's a negotiable thing, and there might be insurance coverage that might cover it.
Correct.
You know, and where if you find out about it after you purchase that home,
It's on
you
you.
could be up a creek with no paddle, you know,
Yep.
and you could be up in some hard territory there to buy a new house, buy all the new furniture and all that kind of stuff, all the expenses that come along with buying a new home, you know, and now all of a sudden, hey, we need $1,500 or 15 grand, you know, to fix your water lateral. You're gonna have poop flowing in your basement.
Yeah, especially as a new homeowner.
Yeah.
I mean, we're all there, right?
Yeah,
Like you buy your
for
first
sure.
home, like you get something that breaks for $1,000, and you're like, "What are we gonna do?"
God, yeah,
Like,
yeah,
Total
exactly.
meltdown.
We're eating ramen.
Yep,
Yeah.
exactly. You know, so that I guess I see value there. You know,
Oh, a lot.
and I guess how much does that cost if you're talking about adding that into your homeowner's insurance policy? Is it like a $20 extra, or is it a $200 extra?
Well, it depends on the carrier.
Yeah.
You know, some of our carriers just tack it on for $15.
Oh, okay.
Right, gives you
Sure.
15,000 worth of coverage.
Yeah.
Other carriers, they actually go off the basis of your home,
Yeah. Mm-hmm.
so how old your home is, because they've realized that they've started to pay out a lot of these claims, and they
Yeah.
get very expensive, and they're more
Yep.
frequently on older homes.
Now, these underground utilities, like if there's a lightning strike that strikes out on the electric pole out here, is that covered by regular homeowner insurance policy, or is this something you have to have that rider for, or that extra piece?
So that's getting into the weeds of some of the fine print too, and really working with experts that can consult you on that.
Mm-hmm.
So there's what's called a named peril policy that says we cover X, Y, and Z.
Yeah.
And then there's open peril coverage that covers indirect losses like
Sure,
that.
sure.
So yes, and any policy that we would be striving to sell you
Mm-hmm.
would include that coverage where it surges the whole house.
Covers, yeah, because that can destroy
I mean, look at
computers, TV. Oh, dude, if it wrecked everything in here, oh my
Right.
god, yeah, that'd be
Yeah.
no fun.
no,
no
knock
fun.
on wood, please.
Exactly. Now, scheduled property. What is that?
Yeah, scheduled properties really are valuables, right? I mean,
Okay, so that's like when we put Tammy's ring on and
Correct.
stuff like that. That's what we're
traditionally
talking about.
people think of these as like a jewelry rider, but we could do scheduled property for guns. You know, I have a friend that has a gun collection, very expensive guns. So we could do guns. Furs is another one.
I might know somebody that has a gun or two, so I might need to talk to you guys about that. You
you
know,
go.
yeah.
You get those scheduled, and the beauty of having your expensive items scheduled is that they're not subject to deductible, right? So if they're lost, stolen, they burn up in the fire, you're not paying your call it $1,000 homeowner's deductible before you get the value for it.
Sure.
But the expensive items I would mention do require appraisals. So typically 10,000 is kind of that limit.
What do you mean, like limit?
For carriers before they request an appraisal.
Okay, so they're not going to want to appraisal each one of my guns. They just want to know what they are and
They'll use some comps and
yeah,
just
the
validate.
values. Yeah,
Yep.
yeah. Okay.
Yep.
All right. I don't have any crazy expensive guns. I just have
no
a num-
50
a num-
cal
a number-
mounted on a helicopter somewhere.
That'd be-
Yeah.
Put it on a drone.
Yeah.
No, you'd get arrested for that. I think the FAA would have a problem with me at that point.
I think so.
Yeah, but yeah, so it's something I got to look into. So, and then extended construction costs. What is that? Any idea?
So I'm thinking that might be a name of
I think when I was reading it, it was like if the rebuild of your home costs more than what you had set up as your
sure.
limits or
Yep.
something like that.
Yep. So that would be another facet of the policy where let's say you insure your house for $300,000.
Yeah.
There's going to be an optional endorsement that you can get guaranteed replacement cost coverage, which is going to
That's
give
the
you
thing.
extra
Yep.
coverage.
I think that's what it's talking about.
Yeah.
So, like with a lot of people, they get their homeowners insurance policy. They live in their home for 10 years and they never talk to their agent.
Correct.
You know, I mean, the nice thing about with you guys is you guys are adjusting that and stuff as we go. As the value of the home has gone up, you guys
There's
have been
some
adjusting our
inflation
policy.
guard
Yeah,
coverage.
you've been
Yeah.
doing that kind of as we go. But for somebody like that didn't do that,
Right.
and they got their insurance policy 10 years ago, valuing the home at $300,000, to rebuild that now, there's no way. At least that would then help
Yeah.
cover that.
And the carriers typically give anywhere from as low as like 25% up to 50% of extra coverage. So you have 300,000, you'd have another 150K. That's
Perfect.
a lot of buffer.
Yeah,
Yep.
that's a lot of buffer in there to make sure that you're covered. Yeah, and if you did some remodeling or anything like that now increased the home's value, but you didn't change your homeowner's insurance policy, then that's going to kind of cover that a little bit. So yeah,
Talk
cool.
to your agent.
Yep, for sure. Flood insurance, we kind of talked about that already. Termite and wood destroying insects. Do you guys even do any of that stuff around here much?
No, a lot of that stuff's excluded from carrier to carrier anyways, unless the termites were to cause, let's say, like a wooden chimney. They put a hole in it. Water comes in through a rainstorm. Insurance might cover the damage from the water, but they're not going to do anything.
Yeah. And honestly, wood destroying insects, if you're talking about termites, we generally don't get them up here. They're subterranean. They freeze off every year. So basically, once you get down through halfway through Illinois, there's not going to be any termites up this way. We do get occasionally like wood-boring ants, like carpenter ants and things like that. Wood-boring bees occasionally. Carpenter ants, they're generally going to go after already rotted wood. So the wood's already rotted. That's not the ant's fault then.
You've already got a problem.
Yeah, you already got a problem. You're just ignoring it. And wood boring bees and things like that are usually the problem with like decks and things like that. So not we don't have too much of that. We do still do a bunch of wood destroying insect inspections for like VA stuff and whatnot, but that's just because the VA doesn't know what they're doing.
Yeah.
So they just make up rules, Now, the next thing we want to talk about is as far as homeowners insurance goes, there's a number of ways that we can go about saving homeowners money, right? And one of the things that also can happen is we can also cost them money, right? And but based on the homeowners insurance policies and things like that, and how it's set up based on not only the policy itself, but also who you are and what you're doing. So what are 5 things that can increase a homeowner's insurance cost?
Sure.
Like the 5 biggest things.
Biggest thing would be, right now, most topic of the whole industry is your roof year and what condition it's in.
Okay.
So, if your roof is starting to go, shingles are lifting, things like that, if you're going to let that just keep riding out, your rate's going to go up as a result of that.
Yep.
Other thing would be, and these are all some preference things too, like if you want a wood burning stove because you like a wood burning stove, put it in. Like, don't let insurance make you not do it. Make sure it's installed properly and all the clearances are met, but you're going to pay a little more because that's another fire exposure.
Yeah.
So those things, credit score is a big.
So fire exposure and roof condition.
Yep. Right.
And then credit score is
going to drive the rates one way or another. Zip code, again, where it's located. And part of that is like where you're located in essence with a fire hydrant and fire department. So if you live in an unprotected area that maybe 5 or 6 miles away, rural, you're going to pay more because the time the fire department gets there, it's
already half tindered.
Right. They might just let it keep going.
Sure. So I think that's a good list.
Yeah.
So just to recap, we had the roof was number 1. We had the zip code was 1, where it's located. We had the fire risk, so anything that's in the home that would result in increased fire risk. Proximity to fire services and things like that. And what was the last one I'm missing?
I don't think there was the last one, but I would just say trying to keep your auto and homeowners policies with the same carrier, because if you have 2 separate ones, that's
especially right now
separated.
It's not benefiting from the discounts.
They're looking. The more business you can have with them, you have one deer hit that could wipe out the whole auto account, but if you got a home with it.
Did you say bundle?
Bundle.
Bundle's the word.
Bundle, baby.
Bundle's the word, baby. So that is your 5 things to help increase your homeowner's insurance costs. I guess you could look at the other way, and 5 things you can do to help save yourself by, being closer to the fire department, being in a good area, not having, fire risk in your home, all that kind of stuff, having a good credit score. All those things will help. Yeah, absolutely. Newer roof. Yeah, for sure. All right. Now, the next thing we have is 5 ways we can save money on our homeowner's insurance policy. Now, let's go into this. I have a house. I have a house. What are 5 things that I can do with that home to help me save money on my homeowner's insurance?
Make it a smart house.
Number 1. Smart house. What does that mean?
Let's get some smart thermostats, smart smoke detectors, maybe some video cameras.
Really?
There's home monitoring systems that monitor if, something's going off with your water,
So if you have like ADT or some smart technology like Simply Safe or whatever else, you actually get cheaper insurance?
Absolutely, yeah.
No kidding.
Or get that
depending on the carrier
backup generator. That's a discount too.
Selling point, Peter.
Yeah.
That's right.
Peter's in works for Generac.
Employee discount?
He's part of the, yes, he actually found out he does get an employee discount. It doesn't apply to me though.
No,
Right.
so how that would work specifically is I would have to purchase it technically, and basically under my name. So
And you do live here, so we
Father's
could
Day
work
gift?
that out.
yeah, Father's Day.
There
I
we
don't make
go,
that
baby.
much
Now
money.
we're
I don't make
talking.
that much money.
Hey,
Now we're
we're in
talking.
sales, Matt.
Yeah, that's exactly.
We'll take them out for dinner.
For sure, yeah, exactly. So that's one thing. What are some other things we can do to save money on our homeowners insurance policy that we already own? What are you thinking?
So smart home, I would say don't be, I know you like a lower deductible. I mean, we're not talking, it's not like Matt has $100 deductible.
Yeah.
But don't be scared of higher deductibles, especially right now. Think about it. Are you going to have somebody come out to fix a $1,500 damage incident? So
Yeah.
$1,000, $2,500, or maybe you want to tack on a separate wind hail deductible just to reduce the rate a little bit. Keep working on your credit score. I mean, there are companies out there that don't take that into account. That's really just an industry thing that we don't have control on.
Yeah.
But really work on that credit.
Is that
score.
something that if we think our credit score has gone up dramatically, that we have to bring that to the insurance company's attention?
At renewal time? Absolutely. Tell your agent, like, hey, my FICO score jumped by 40 points, whatever.
Yeah.
And we can always take any information to underwriting to help sell the case for
yep,
you.
Yep.
Yeah.
Sure.
And I would say that there's a little flexibility with the credit score too, depending on the type of activity on your credit report.
Sure.
A little bit more forgiving, and we can talk to our underwriters on things like medical bills, stuff that, but, if you have $50,000 worth of credit card debt,
Yep.
and, all of these loans that are for non-essential items,
That all makes a difference.
it all makes a difference.
Yeah.
And we can kind of negotiate sometimes, maybe not necessarily on price, but getting you with a certain carrier.
Okay. So we got smart homes. We got manage the deductible, credit score. We
Bundle.
need two more.
Bundle,
Bundle.
baby. So
Bundle,
not even
baby.
just auto, umbrella, all of it. Wreck vehicles.
If you have it
the
all
more
with
you
one
have, the better.
company,
Not all companies will do everything that you want to insure,
Yeah.
but the more you bundle, the better.
Discounts come in.
Paid in full is another discount. Not everybody can swing that, which is understandable.
Yeah. Does paperless make a difference?
I hope that more companies will move to that, where
Not
you
as
can
much.
just get a copy of the renewal.
Yeah.
Cut down the postage cost.
Yeah, because right now, I mean, we get an envelope, we get a big old folder in the mail and everything.
Yeah.
So bundle, and what was the last one you gave? Was there a last
Sorry, I
one?
just got a quick question.
Yeah.
So I saw this on the chat as well. For auto and renter insurance, I know you were talking about the bundle for home and auto. Would that work the same way for auto and renters insurance?
Yeah, Jack.
Yeah, absolutely. There are discounts associated with it too. In fact, sometimes when you package a renter's policy with an auto policy, you almost get that renter's policy for free.
Oh, okay.
So it's a big enough discount where it actually makes sense.
Okay.
And we just hit on some of the reasons why you would want a renter's policy.
Oh, yeah.
A lot of people say, I don't need a renter's policy. I don't own that much. But
Yeah.
I mean, without going into all the detail that we just discussed, I mean, there is value to $150 a year for a renter's policy. And then when you package it with your auto, now you're almost getting it for free based off of the discount that you're getting on the auto.
Okay.
Yeah. Cool. So I think that's a pretty good list, you guys. It helps save some money in your insurance.
There's
Tammy?
some employer discounts in there too. Certain industries or actual employers have some discounts throughout Wisconsin.
Yeah, like when I was a part of the teacher union, there was teacher union discounts and stuff like that.
Educator discount.
Yeah,
At
for
the end
sure.
of the day, if you want to save, work with an independent agent or a broker.
Yeah.
Yeah.
So picking up the list here, smart homes, which ADT, all that kind of stuff, and then manage your deductible, meaning don't send everything to the insurance company. Manage your deductible wisely. Maintain a good high credit score. Bundle. Okay, and then check out any discounts that might be available to you based on your occupation or interests or clubs or organizations that you belong to. So I think that's a pretty good list. Yeah. So that's 5 things that can help you save money on your insurance company, on your insurance policy. Now the next one, I'm going to do a little quick fire here. A little quick fire. I had some myths that I was looking up for homeowners insurance, and Dan and Jack have not been privy to this list. So you just tell me, is this a myth or is it the real deal? All right. Okay. So fireplace raises insurance rates. Yes or no?
You take the first one.
I think that's real.
Having a fireplace is a real deal. Makes your insurance rates go up. A gas fireplace affects insurance less than a wood fireplace.
True.
It does. Okay. All right. If you're close to a fire department, insurance is cheaper.
Correct.
Yes.
Next one's kind of similar. If you're close to a fire hydrant, your insurance is cheaper.
Correct.
There we go. Someone breaks in and gets hurt. Is your insurance liable?
No.
They're not.
No. So
See, I've heard that. People say that.
There could be some gray area there. The criminal would have to have a pretty good attorney, but because they did something forceful and intentionally illegal.
Yeah.
Yeah.
Okay. All right. Someone using your stairs without permission gets injured. Is your insurance company liable?
I think that's another gray area one. Without permission, they're trespassing. So would your insurance company defend you? Yes, because they're going to have your back.
Yeah.
But I don't think they would be liable.
So those Jehovah's Witnesses that came up to my door and fell on the ice on this day, I'm not liable?
No.
All right.
Unless they see that you're icing them.
I saw them coming, so I threw some water out there. Yep. And then the last one I have is dog bites somebody through a fence in my backyard. Like somebody sticks their hand in the fence and gets bit. Is my insurance company liable?
Dog bites are, from what we've experienced, if your dog bites, there's going to be some damages paid.
Yeah.
Yeah.
No good.
Well, I won't go into specific detail, but even if a dog gets freaked out by a stranger coming up and asking like, "Hey, I want to pet your dog," and quick puts their hand in their face. Yeah, that's
liable. Yeah, for sure. All right, well, that's a good one. And then the last thing that we had in the homeowners insurance realm was, and this buds into auto insurance too. Credit score really wasn't a thing for affecting insurance before, but it is now. How does credit score? I guess, and the bigger question that I have is, how does credit score affect auto insurance when it comes to that?
Sure.
And is it liability or what? What does it come down to?
It's all in the details with the underwriters, the actuaries, I should say.
Yeah.
I mean, there's data proving that people with lower credit scores are more likely to act irresponsibly.
And that doesn't mean that we believe that.
Disclaimer.
Colonial is not saying that.
Yeah.
It's really, like Jack said, the actuaries are driving the data there.
It's all data driven.
Yeah.
So and they file more claims.
So they're seeing a person that has a lower credit score is a greater risk.
Essentially.
Okay.
Yeah.
And they're using that as a level of risk, even though the person that has a low credit score may be a great driver, have never filed a claim.
Yeah.
They're automatically going to have a lower score just because they have a low credit score.
And we don't see the credit scores with our clients. There's a difference between a credit score and an insurance score, roughly the same thing. We'll see some rough numbers on that. But I can tell you, I mean, we've probably got clients on the book that are completely inverse. Super high credit, awful claim history, super low credit, have never even picked up the phone to put in
the relationship doesn't even
but that's insurance, right? It's the aggregate, right?
Yeah, and they're just trying to, like when they're watching the Packer game, they keep talking about analytics. That's the analytics is what it is.
Correct.
It boils down to some nerd with a computer looking at numbers, and I mean, you can't fight the numbers. The numbers are the numbers, you know what I mean? But not everybody's going to fall into that, and everybody's got to kind of understand that. But they need to have a kind of a formula to put on everybody.
And the benefit
universal.
of, again, that box of where you may fit in best with an insurance company. Some companies care about it a lot, really underrate it. Others are like, you know what, big deal. We're
going to look more at your claims history.
Sure. All right, so we are to our question giveaway of the week. Question giveaway this week is going to win a Nest thermostat. So we got a Nest thermostat here. Can you see that in there? There we go. And we also, Colonial Insurance is going to chip in a hoodie. So we're going to send a Nest thermostat and a Colonial Insurance hoodie over to you. If you can answer this question correctly, first person to answer the question correctly in the comments will win this. Whether you're watching the show live and you answer it, or you answer it during the replay or anything like that, the first person that I see in the comments with the correct answer. The correct answer is the answer that I have written there. No other answers matter. I am the only one that has an opinion with this one, so there's no arguing with me. And then the rules with the giveaway is you cannot have won a prize in the last month. Otherwise, you are not eligible. So the question of the day here is, how long has Colonial Insurance been in business? How long has don't say it. How long has Colonial Insurance been in business? Now, that's not saying you can't use Google, but how long has Colonial Insurance been in business? And if you're going after the Nest thermostat, you probably want to own a home or know someone that owns a home so that you can actually use it, or you're going to be saving it for a while. So, Christmas gift. Oh, that's a great. It's going to be that time, Dude, I was in Costco yesterday, and all the Christmas stuff is up. I'm like, what the fudge is going on, man?
I was happy to see the pumpkin pies.
Yeah, those are good.
Yeah,
oh my gosh, Costco pumpkin pie is good stuff. But yeah, they got 3 aisles of all Christmas stuff already. I'm like, all the trees, the lights, the whole. I'm like,
It gets earlier every year.
This is crazy, people. So Nest Thermostat, Colonial Insurance hoodie. Answer the question. Give us the answer, people. All right. Now, the next thing we're going to get into is we're going to go through the process of getting auto insurance. Now, Peter, my son, recently, well, he graduated from college roughly a year and a couple months or whatever. But he has been driving around the family car for a while, the Subaru Outback, which has been a great car for you, correct, Peter?
It's a super great car. It's right now, I mean, I put it on it, but I forgot how much I had it, but now it's like 230,000 miles and still running pretty good.
Still running great, yeah. It's been a great car.
Subaru.
Yeah, and it's it's been a great car, reliable car. Tammy started driving it. She drove it for 120,000 miles. Peter drove it for a while. I drove it for a little bit when I was in between trucks and stuff. And it's been a great vehicle for him. But he didn't want a station wagon anymore. I was
heartbroken.
Yeah, I know, right?
No.
And so Peter, he's been working at Generac, and he's been living home here, been able to save some money or whatever, and wanted to get his first car that he owns himself. And as a result, Mom and I are like, hey, you know what? It might be time to kick the old birdie out of the nest and make him start paying his own insurance on top of it. And Peter, needless to say, was not crazy about that. But he realized it is a reality of life that I am now 24 going on 25 years old. And it's about that time, right?
Yeah, about that time.
He does
a little hesitation there.
Yeah. Real life can occasionally be fun, but occasionally it's also not fun. The reality of expenses and things like that. So one of the things that we're here tonight and we're going to be talking a little bit about is Peter getting car insurance for his new car. He did get a 21. Is it, Peter?
I got a 2020 Honda Civic.
2020 Honda Civic.
Nice.
Yeah, nice little car. Has a moonroof and a couple of really nice features. It's got all the connectivity, all the new features that my 2011 Subaru Outback didn't have.
Right.
You know, so he's liking that, right? Little upgrade, Pete.
Yeah, definitely a huge upgrade.
Yeah, huge upgrade.
Probably Bluetooth your songs instead of
Apple CarPlay.
There you go.
Yeah,
CarPlay.
for sure. Yeah, absolutely. And so he's flying high. He's loving the vehicle so far, I think, right, Pete?
Yeah. Before we got it, we just noticed one thing with it, but we were able to get that kind of taken care of with the kind of like what they owe, the dealership, and what we owe. Got that all taken care of, and have been driving it ever since.
Yeah,
Very
we have been looking at cars for a while, you know, and Peter found this one, and it was on a day when him and Tammy were going around and looked at a bunch of cars or whatever, and they found this one or whatever. And this looks really nice, and it's we were looking for lower miles, newer years, and in the price range that he's looking at. And this one, it had a little bit of a ding in the bumper. Dealership agreed to fix it, and they gave him a good, by the time we negotiated down, got a good price on the vehicle and stuff like that. Nice. So he picked it up. Actually, the bumper got fixed and all that kind of stuff. It came out to, Monday or Tuesday you picked it up last week?
Was Pretty sure it was Monday.
Monday.
Yeah,
Monday last week he picked it up, and we now need to get that insurance on it. That's on his name only, not Dad's name on there anymore.
Yeah, big deal.
It's a big deal, yeah. And so Peter, we basically reached out to Colonial Insurance, and Dan sent us a link that we went and he filled out a bunch of information about the vehicle and that kind of stuff, and just some general idea of what he's looking for as far as his insurance policy and stuff, and then. That form that he sent you, what did you guys do with that? How does that?
Sure. Yep. So we've got a link that we can send that will also, if you had like a previous policy, that would capture your current policy pages that would send back to us so we can see exactly what coverage you had and things like that. But our software then takes that data and puts it into a rating engine with all of our insurance companies. And then, you're part of the algorithm at that point. And then it goes through, does the rating, and kind of gives us a ballpark on, these are the top 3 from a rate perspective. And then we usually weigh that with like the value proponent too.
Sure.
If company X is phenomenal on claims compared to maybe a budget company, we're going to have that conversation. So that's what we did with your info, Pete.
Okay.
Yeah. And then when it comes to his policy, was a number of questions on limits and what kind of insurance we want and all that kind of stuff. Now he does have he did pay probably about half of the vehicle. He had money saved up, so he just paid that in a check. But he did finance the other half of the vehicle, to kind of trying to build up that credit history and stuff like that.
Right.
He could have probably paid for the whole thing in cash if he wanted to, but he would have been left with not a lot of money in the bank, right, Pete? And to build.
Well, in long run, credit wise.
No, with the price we got it down to, I still wouldn't be able to pay it.
Oh, okay. So we're going to get some financing either way, but I think that in the long run will help him, grow that credit history
Absolutely.
and stuff like that.
Yep. Yeah.
So he does have some of it financed. So when we talk about auto insurance, when there's a lien on the vehicle, meaning somebody else holds the title, right? So the bank still owns the title for his vehicle. Now that changes the policy, right? What do we have to do when that happens?
Yeah, essentially, I mean, we just have to have a loss payee listed on the policy. It's kind of similar to listing a mortgagee. So any loan company that you might have on your homeowner's policy, it's relatively similar in regard to having a car financed.
Okay. So the bank then, so what is it, Honda financing, Peter?
Yeah, we got it through Honda financing.
Yep. So Honda financing is carrying the lien on the property. So then they're listed on the insurance policy, correct? And then, so if Peter were into a accident where it was a total loss,
Two-party check.
it's a two-party check. So how does that work?
Yeah, so it gets made out to both parties. Honda is going to want at least the portion that they're owed to pay off the vehicle sent to them, and then you would be left with the balance.
Okay.
And the fact that you put that much down to, you don't have much exposure for like gap coverage, it's called, where you might be upside down in that scenario if you tow it off.
Okay.
Yeah, so
So gap coverage basically is something that you get when you buy a new vehicle off a lot, right?
yeah.
How does that work?
And maybe you just did low money or no money down. You drive it off the lot, that car depreciates pretty quickly. You go out there, you total it out. Insurance company is going to go based off of like a blue book value.
Yeah.
So, if you're 5,000 under, that's debt that you have to carry over to the next vehicle.
That's the gap.
Gap coverage fix that.
Yeah. So when you buy a new vehicle, now Peter's was a used vehicle. It had what, 16,000 miles on it, Pete?
We got it for under 15,000.
Under 15,000 miles. Yeah. So it was a used vehicle. So the amount after you drive it off the lot isn't as much as if it were. So like a new vehicle, they say when you drive it off the lot, you lose $5,000 as soon as that tire hits the pavement. But with a used vehicle, is not as much, but there's still going to be some loss there, and if you were to drive out of that lot and then get in an accident, that's where this gap comes in. After you've paid the vehicle down a ways, that becomes less of a concern, right? So gap coverage is not something that Peter would be looking at, right? And I think you had that figured in there probably, right? And as far as limits on the policy, there's a wide range, right?
Yeah.
So
yeah,
how does that work out for car insurance?
I wish that the statutory state limits were actually higher. So right now in Wisconsin, the lowest limits that legally everyone's supposed to have auto insurance, we all know that's not the case, but you have to carry $25,000 in bodily injury coverage, $50,000 per accident, and then $10,000 in property damage coverage. So let me break that down. So bodily injury would be, let's say you hit me while you're driving. As long as my injuries are $25,000 or less, you're good. If my injuries alone are $50,000, you're on the hook for the other $25,000.
Okay.
And then on the property damage side, you've got $10,000 in property damage. If you smoke Dad's truck, $75,000 F-150,
Not going to cover it.
you're not good. So you'll owe the $65,000, and that's where the build your own insurance online is a helpful, and I see the benefit of it, but it can be a dangerous thing too.
Yeah.
Oftentimes, to bump up and double, triple, quadruple those limits might be another $100, $200 a year.
Yeah. Now, what kind of limits did you, looking at Peter's stuff, what kind of limits did you look at for his stuff? What do you think?
So our baseline coverage for anyone coming into our agency knew was going to be 100,000 bodily injury per person, 300,000 per accident, and 100,000 in property damage coverage. That's our starting point for anyone. We'll go lower if you really want to do that, but we're going to explain it in pretty good detail. We would ideally like to see you at 250,000, 500,000 per person. So yeah, we'll have that conversation and go really far in detail on what each coverage is designed for.
And at minimum 100,000 with property damage is really important. I mean, look at some of the vehicles. I mean, F-150s, Teslas.
Yep.
Yeah.
Property doesn't just have to be a building.
Correct.
Yeah. But I could only even just running into a stop and go light these days can probably cost you $100,000.
We've had those. I mean, and that ties in, skipping ahead here with the umbrella policy. That's your all over encompassing liability policy. $1,000,000 is typically $125 to $150, $200 a year in coverage, and that covers you in that scenario that you do total out that expensive vehicle and your policy gets exhausted, or if you have a major liability claim where, God forbid, you kill somebody or they're paralyzed. That's what that's for.
And the umbrella thing, I'm glad you brought it up, because I mentioned it when I was blasting out the show tonight, as I mentioned the umbrella thing or whatever. We didn't talk about that with homeowner insurance. Umbrella policy is something Tammy and I have. I think we have like is it a $1 or $2 million, $1 million umbrella thing? But that it covers what as far as a homeowner is concerned?
The liability exposure. So that example, maybe you got a 2-story deck and one of the railing gives ways, and somebody breaks their neck or what have you. That's an extra $1 million on top of your personal liability limit.
Sure.
So best bang for your buck as far as policy value goes. I'd be way more worried about my assets being pursued or being sued than my house burning down randomly.
Yeah.
If you're taking care of things.
Yeah. Well, and house fires are much less of a thing than they used to be, because we're much more conscientious about our fire safety and things like that. It still happens, but much less frequently than it used to. So,
Absolutely.
for sure. Umbrella policy, not a bad idea. Tammy and I saw the value in it a long time ago, and I think we still see the value in it as far as the protecting ourselves, protecting our assets. And these days when anybody can get sued for anything, it's
litigious world.
Oh my gosh.
Yeah. You don't want your wages garnished.
Yeah, somebody slips on my sidewalk outside, and but then they're so you didn't salt it like you're supposed to, and even though I may have, they're still going to drag me into court and go through the whole mess, So yeah, for sure. Now, as far as the deductible. The deductible plays into the whole role as far as how much the insurance is going to cost you, right? So with just like anything, the higher the deductible, the less the insurance cost.
Correct.
And the lower the deductible, the greater the insurance cost, right? So what's the average? I mean, what did you think that he should be looking at as far as insurance goes?
Yeah, so we like to have the conversation of like, what do your cash reserves look like? Can you stomach $1,000 deductible if a collision claim happens, or does $500 sound more appropriate? So right now, I mean, with where the industry as a whole is, glass is expensive. I mean, claims just in general are more expensive than they've been in the last 50 years. We're truly in one of the hardest market cycles we've been in. So I'd say your common deductible for comp and collision preferred from the companies would be like $500 for both. You got a little skin in the game for a windshield or a deer hit, and then $500 on collision, and that's pretty standard across the board.
Do you understand what he's saying with that, Pete?
Yeah. The only thing I was thinking of when you talk about the deer, I kind of remember what happened to your truck with Bambi.
Oh my gosh. Yeah, driving up north at dusk, and up north some of the roadways are lifted a lot so that they never get underwater, but the ditch comes up sharp, and so this young deer, the brush is tall, came jumping out or whatever, and it jumped. There was no way I could stop or anything. And next thing you know, I got Bambi in my front grill, and I hit the thing or whatever, loud crash, thing goes flying off to the side or whatever, and I'm slamming on the brakes. Next thing you know, I get out, I'm leaking radiator fluid and all this. I could barely limp to the gas station up the road, And luckily found a tow guy that was willing to, it was cheap, honey. It was like $150, $200, wasn't it? It was $300, still cheap.
$300 in a case of beer.
Yeah, at $300 to haul my truck on a flatbed from Florence, Wisconsin, all the way down to Uncle Dick's shop in Germantown.
No way.
3.5 hours.
AAA was going to be $800.
I was going to say, that's
crazy.
Wow.
Yeah,
that's a screaming hot deal.
Yeah. The insurance company was glad to pay his bill.
Oh, yeah.
Yeah, that worked out really good. But yeah, and if Peter, if you were in an accident today and the car were totaled, God forbid, okay, would you feel comfortable having to pay $500 to have it repaired or replaced, or $1,000 to have it repaired or replaced?
1,000.
You'd be okay with 1,000.
I'd be okay with 1,000.
Okay.
Yeah. Part of that too is with your collision deductible, that's kind of your at-fault coverage. It also covers like uninsured drivers, but predominantly, you're trusting and you're confident in your driving abilities. So having that higher deductible shows like, yeah, I got some skin in the game, but I trust myself.
Now, what does that $500 to $1,000 difference save him in insurance costs as far as premium?
Company to company, it all depends. So I would say on average, $50 to maybe $100 a year.
Yeah, maybe even a little bit more.
Yeah.
Yeah. I mean, especially with, your age bracket. I mean, you're 24 years old, right? Yeah. I mean, 24 years old, you're going to reach a point where the premiums start to go down, but you're at a point where they're not, right?
Exactly.
And what age is that?
16 to 24.
So
for males is
25, he's going to have. So in January, and he turns 25, it's going to be cheaper.
I hope so.
Yeah.
Yeah. That's historically been 25 or married is when that discount starts.
And you also get added cost because you're male.
Yep.
Yeah.
Which is
Correct.
That is
ridiculous.
Yep. That's a myth. That's
Totally
true.
sexist.
Yeah. Well. Yeah. Data.
Yeah, but the data's screwed up.
This is where the data's wrong, right?
Yeah,
I was
the
just
data
gonna
is
say
and it has so much to do with how many. Never mind.
I agree.
I don't want to
agree
get
with you.
blown up on the YouTube.
I was just gonna say in high school, I'm kind of reliving that. I was like, I knew a lot of male, more racing drivers, and still when talking down the hallway. So I understand why it would be the case. And I'm like, oh, this sucks.
Yep.
But I accepted it. It is
What it is. Yeah, yeah. So, and then with insurance, when Peter's looking at paying this, so there's options for payment, right?
Right.
So we can break it down month by month or 6 months, year. What's the best way to? How does that work with as far as saving money on his auto insurance?
So, I mean, if you can swing it where you can pay the full 6 month or annual premium in full, most companies will knock off a couple $200 to $300. Otherwise, if it's more budget friendly to monthly auto pay it, that's probably our most popular option. Spread it out. You can do that too.
Okay. Yeah, and if you look at that higher deductible, Pete, that $500, as long as you for the first 3 or 4 years you drive and don't have that accident, then you now have saved that money. You're ahead of the game, you know. And then every day after that, you're making more money, and you're basically paying off your deductible at that point,
Right.
you know.
Yep.
And there's sometimes you talk about insurance and they talk about disappearing deductible. Is that like a real thing?
Company
on the carrier.
Yeah.
Depending on the carrier, like they can. So that if you don't have a number of claims, that might be one of the benefits that they draw you in with.
Correct.
Right? Okay, so if you don't make a claim over 10 years, it will cover your $1,000 deductible or something like that. And so it depends on the company.
Yeah.
So got to shop around.
Not all companies offer that.
Yeah, for sure. Now, any other questions you had? Did you have any questions about the quote that they sent you at all, Peter, with that?
No. I mean, I've been kind of looking over it, kind of when you guys were talking earlier as well. I mean, I think more questions might come where we kind of do that more breakdown portion of it, but just kind of glancing over it, everything seems to be legit.
Yeah. So well, the next step that we'll do is we'll set up a time that you can go in the office and talk to Dan or Jake about it, and figured out what exactly the policy is going to finish at, and then sign up, right? And so what's the timeline that he has to do that?
Well, I mean, now that the vehicle's titled in your name only, you have some grace where it's automatically covered under mom and dad's policy because you're still a household member. Okay. But that's pretty unique to the company that you guys are with too. So I would say by the end of the week, we should probably get a plan in place together. And maybe we talk about, maybe the personal liability component makes sense. And we even look at a bundled option with one of our other companies too, and just see where those rates fall in.
Sure. Yeah. So Peter is like an 8 to 5 guy. So do you guys do stuff outside of the regular day?
Yeah, absolutely. I mean, our phones are going nonstop. When it's convenient for you, as long as you schedule a time with us, one of us would make it happen where we can sit down with you or do it via Zoom or whatever.
Sure. Yeah. And Peter, we figure that out before they go tonight?
Yeah,
Does that work?
Do that.
Yeah. Okay. That way he's
Dad's committed to get the
I
policy over.
It's not that I don't want him on. He's been a good driver, and I haven't had an issue with Peter being on our policy. I just don't want to see him miss that grace period, And I knew the grace period existed, and we kind of had a conversation about that. That Tammy was like, "Well, every time I sign up for something, I always call them. I sign up right away." I'm like, "Babe, you're okay. If Peter got in any car, he's insured, so it doesn't matter. You know what I mean? But it's now titled in his name, so there's a period of time. But he'll be good." Now, when you looked at the that quote that you got, Peter, what did you think about the price? Was it more or less than you were expecting?
Less, actually.
It was less.
That's
okay.
I need more of you, Peter.
Yeah, everybody gets surprised.
Come hang out in our office.
Definitely am doing that, but I just kind of hear. I mean, of course, I grew up with mostly just a single mom most of my life, so her being a penny pincher always kind of instilled to me that everything's more expensive than a lot of things seem to be nowadays.
Sure.
And living with my dad now, we instilled to me like, oh, things are a little bit differently, but still kind of with car insurance, I'm like, oh, I always heard economy going up, gas prices are of course high up there, so I'm like, oh, everything's going to be more expensive.
Yep, and it's just part of the deal. But understanding what the costs are going in is important for you, and life is got many expenses, but there's a lot of great things that come as a result of it. Like you get to drive a new car around now, you know, and drive around with the confidence knowing that you're not going to have to worry about if something does happen, you're covered.
Yeah.
You know, and that's got definitely a benefit. With some of the crazy Mario Kart crap that goes on the highways these days. Holy man.
Milwaukee County.
Yeah.
Dude, it's not just I was coming back from Belleville out through Madison today or whatever, and dude cuts across 4 lanes of traffic on the Beltline in rush hour,
Right.
and barely misses a dump truck, you know, and he's off into his exit, you know, and I'm like, holy man, that could have been all kinds of bad, you know, and we're doing 75 miles an hour,
Right.
you know,
You can't react that quick.
Yeah,
and it's never their vehicle that gets the most damage.
Yeah, it's always
and,
somebody else.
Yeah, and
they get swiped a little bit and they take off because they don't have
They probably don't even have
They probably don't have insurance. Yeah, they probably don't even care, you know? So, yeah. Tammy is flashing that we are nearing the end of our time. And I think we got the bulk of what we're looking at coming out of this. But one of the things we do at the end of every show is we like to give a tip of the week. And this is a timely tip of the week. So, Wisconsin, right? Polar vortex next week, maybe. Right?
Could.
I'm supposed to golf this Saturday, and my dad's I'm supposed to golf with me. He's like, "Oh, Maddie, I don't know. That's supposed to not be very nice." I'm like, "Well, you know, I got my golf cart condom. I'm going to throw that over it. We'll be dry, and we'll be all right." But so winter is coming, and if you're watching this and you live down south and you're laughing at us, that's great. But we got to be prepared up here. We always like to be ready, even though that first snowfall comes. Everybody drives like they forgot how to drive in snow, but whatever. But when that snow comes, we want to be able to wheel that snowblower out, get her up and running, and get going again. Russ Benzer from the Mobile Repair Guys was in on the show a couple months ago, almost now. Yeah, and he talked to us about snowboard prep. And so making sure that your snowblower is up and running a month before you get to the winter time is the best thing to do it. Put some nice fresh gas in there, you know, and don't try to start it up with the old gas. Put new fresh gas in your snowblower. Make sure you oil and grease things that need to be oiled and greased. Also on the inside of your snowblower chute, you know, you want to lubricate that up with a little bit of like silicone to make sure that everything flows on there nice and smooth. Sometimes people will use like oven spray and stuff. That works good as well. But they make sure that snow's going to get stuck in there and stuff. So that's good. Also, on your snowblower, you always want to have a stick for getting clogs out. You never want to stick your hand in there. So make sure you have your stick. If you don't have one, go get a stick. But making sure that snowblower is ready to go. Get it out of storage. Get it started up. Get that new gas in there. Get things oiled up and whatnot. If you do need to have it serviced, reach out to Russ and the Mobile Repair Guys. They'll come to your house and fix it for no extra cost. It costs you the same to have them come to your house as it would if you take it someplace else. You know, and then you got to haul it and whatever else, you know.
Time is money.
Yeah, exactly. And they'll do a good tune-up on it to make sure you guys are ready for it. Now is their time that they're not super crazy busy, you know. If you wait a month and the snow comes, get in line, brother. Grab the shovel and stretch your back out before you go start shoveling. But take care of that now. And now is the time to do that. Also, we're also in our last couple of weeks of possible painting and caulking. So if you go to try to paint your house and the temperatures are less than 45 degrees, the paint's not going to adhere, and it's probably going to gel up and it's just going to flake off in the springtime. So last couple times that you can put the paint and caulk on to protect your house for the winter. So definitely get those areas touched up. Even if it's not going to be the finished paint, like you want to do it a different color and you're just going to do a primer on it, just at least get the primer on it. You know, if you leave it unprotected and that water gets in there, it can cause a lot of damage and stuff. Caulking too, making sure all those joints are caulked. If water gets in there, it expands and it causes all kinds of rot issues and things like that. So so definitely making sure, getting ready for winter here. As we have our next couple of shows, we're going to come up with some more of those tips and tricks to help you better maintain and take care of your home so that you are prepared when these types of things happen. Somebody guessed on there 83 years. No, Colonial Insurance has not been in business for 83 years, but thanks for participating. Love you. Close-ish.
That's where we strive to be.
Maybe, yeah. With that being said, you guys, thanks for coming out today. I appreciate you guys. Jack Larsen and Dan MacLeod from Colonial Insurance. If you're looking to get some insurance, give them a call. The phone number there is 262-255-3770. We'll flash that up on the screen here on the replay. Again, that's 262-255-3770. Also, colonialinsurance.net is their website. Websites are actually pretty good. It's pretty easy to flow around. It's nicely organized, not too cluttered, you know. And you can actually get on there and get some good information and stuff like that. But ultimately, reaching out to these guys, they're great resources. If you call them up and just have questions and stuff, guess what? They're not going to charge you. Not a dime. Not a dime at all. They'd be happy to talk to you, answer any questions you might have, and help you out in any way that they can. And one of the biggest things about them, you guys, keep in mind, they are an insurance broker. Okay? We're an insurance company. Granted, the insurance company you hope has your back. all the time. The insurance broker always does, because he doesn't benefit by not having your back. The insurance companies sometimes can, because they can save money by not having your back necessarily. These guys aren't that, and so if you have a problem with the insurance company, these guys can also go to bat for you, and that kind of stuff, which is great. So give them a look and check them out. They're located in Menominee Falls on Appleton Avenue, right over by the high school and stuff there. So a great location. Nice office building too. Did you guys fix? I mean, it was a little dated. Did you remodel?
It was full gut job, new roof, thanks to a great home inspector.
There we go. There we go. Yeah, it wasn't. I mean, the layout of the building is nice, and you got a lot of square footage there, and the basement is huge. Did you guys do anything with the basement?
Might have to get a gym in there at some point.
Dude, that's a tall ceiling down there.
It is.
Swing bay.
Yeah, you could put a simulator down. You could probably get a full swing in that basement.
So.
Yeah. And also, if you want to email them your questions and stuff, don't feel comfortable talking on the phone. That's cool. They're down with that too. Just email them at info@colonial.net. Or is it colonialinsurance.net?
Colonial Insurance.
Colonial Insurance. Info@colonialinsurance.net. You give them an email, ask them your questions. They'd be happy to help you out. But thanks for coming out today, you guys. Really appreciate it. It was a great conversation. I think we educated a few folks about homeowners insurance, a little bit about car insurance. Thanks, Pete, for coming on the show and to being our guinea pig for today. But you guys, I really can't tell you how much I appreciate you. We're going to put this stuff out there for everybody to find out about. And if you guys want to reach out to them, definitely give them a call, shoot them an email. But thanks for coming on. Appreciate you.
Appreciate you.
Thanks for coming on, guys.
Best home inspector in the biz.
We'll take good care of you. All right, you guys, thanks again for tuning in today. This is Matt, the Helpful Home Inspector, signing out. Remember, you guys, the better you take care of your house, the better it's going to take care of you. We'll see you on the next one.